Time of recording, once again, is April 11th, and I'm looking at the clock, 3:23 a.m. I need to put on my good work slacks and head on down to the shift soon. So, Pete Schroeder tells us in the first article that the U.S. Federal Deposit Insurance Corporation, FDIC, you have probably seen these letters before. Well, they've brought on several staffers from Elon Musk's Department of Government Efficiency, which is just a 4chan meme from a woman's dog. According to an email sent to the regulatory staff this past Thursday, the regulator, which monitors banks and backstops deposits via its insurance fraud, said a small team of DOGE staffers is working with the agency leadership, according to the emails seen by the folks down at Reuters. It was sent to the staff, and it says the DOGE team consists of full-time federal employees with appropriate clearances. Like, you see, right there, the way they use words, again, you gotta constantly remind yourself that not only do they not care what words mean or even how they're to be said or pronounced, they fuck them up on purpose. All right, it's like when Tucker Carlson, when he went on there and deliberately mispronounced stochastic when talking about stochastic terrorism. He's a very grown man with a big budget behind him. He knows how to say the word, but he's deliberately using it wrong, right? Just like this one, where they're deliberately leaning on appropriate clearances. Wrong. But they want you to lean on that. Or if you don't worry, they'll have more. Like, they really know how to speed run the nonsense. All right? Now, so, after appropriate clearances, and adds that DOGE staff have not requested nor been granted access to sensitive bank information. Which, just putting that in there makes me think that that's what they're doing. At least me. A spokesperson for the FDIC declined to comment. Well, ain't that living up to the title? The White House did not respond to a request for comment. Don't folks down at the White House tend to have a lot of things to say? But not about this. And shortly after, they removed the caps on banks for overdrafts, which anything you have on autopay, take it off, remove it. Get rid of autopay. Everything that auto-pays, auto-renews, shut it down. Do it manually month to month if you can. They're coming to get you. So, DOGE's, their arrival at the FDIC on Thursday kicks off what could be a tumultuous time for the agency, as the Trump administration continues efforts to shrink the size of the federal government. The focus of DOGE's initial work at the FDIC has been on reviewing agency contracts and its workforce, according to one regulatory official. The roughly 6,000-person agency is not funded by taxpayers, but instead relies on premiums it charges banks. Internal and independent reviews have also found the agency actually struggles to maintain staffing. An agency review of the 2023 failure of Signature Bank found supervisory staff experienced frequent vacancies and continuous turnover prior to its collapse. Now, it is interesting seeing how it's always the goyim using the banks to screw over the people. Something I noticed. Something about that Anglo-normativity. FDIC's Inspector General warned in a 2024 report that 36% of the agency's workforce would be eligible for retirement in 2027. This is higher than average rates across the government, Interesting. More so than the Senate? You gotta be shitting me. All right. The U.S. deploys 3 federal bank regulators. 3. One being the FDIC. 2 being the Office of the Comptroller of Currency. I said 3? Well, now 2. And 2 being the Federal Reserve. States also play a role in supervising BizAnks. The FDIC manages the nation's deposit insurance fund, in which the government agrees to guarantee up to $250,000 worth of deposits per person per bank. The FDIC is also responsible for taking over and resolving any failing institutions. Again, the FDIC manages the nation's deposit insurance fund. Deposit insurance. They manage the insurance of the money deposited into the bank, in which the government agrees to guarantee up to $250,000 of deposits per person per bank. Per person per bank. The FDIC is also responsible for taking over and resolving any failing institutions. So that's what's cracking. They're in there. They're going to fuck that up too. So now know that they're removing insurance for the money deposited in. So if you deposit, that's your money. While also no caps on overdraft fees, while a gang of folks, like my wife, put things on auto pay. I do monthly manual myself. Now, when I first sat down to record this, I thought there were 2 Reuters articles. The second article was just a little blurb saying that the first article exists. I don't even understand why that was published. Maybe that's a website thing. Maybe it keeps traffic driving. You publish something just to publish it. But yeah, no, only this one article. All right, let's continue on and got to get ready for that shift.